Hello everyone, welcome to our morning briefing. It's NFP day and the end of the first week of September. So as usually on an NFP day, we have a lot of anticipation of the data. That's why we are seeing a bit of a consolidation and some ranking markets in the European Open. So, but before I go through what we expect for NFP, I have to make a small summary of what happened yesterday. So we have seen very positive and good results out of US. We had the ADP number spiking at 195,000 from 149 expected. And in general, the ASM reading of the services came above expectations. So US private payrolls, again, above expectations. So that those good news on the labor market of US is what actually caused rise the optimism for markets as well. So also the fact that we had ADP higher, initial claims higher, ISM manufacturing PMI is higher, should suggest that Fed are in a bit of an indecision whether they should cut or hike rates in the upcoming meeting. However, according to a CME group, there is still a possibility for a rate cut up to 92%. So we are waiting and see what will happen on the bank front. So we have another week to go until we have the Fed meeting. So on the data, we had seen stock markets rising higher. Continuing this rally, I have over here the S&P 500 1-hour chart. Continue to the upside. A bit of a small candles, as you can see, small body ones, suggest that the momentum is running out of steam. However, it's still on the upside. Continuing to the upside, the daily candles are quite decisive, so we might see a bit of a continuation, at least until the NFP release. The next resistance comes at 90.86, which was yesterday's high, but also let me zoom out, go to the daily chart. 90.95 is the upper Bollinger Bar, or even higher, around 3,000 area, round area could be an next support for a next resistance, for S&P 500. In Asia session, meanwhile, also we had some positive movements in the stocks. Nikkei closed with gains up to 0.1%, if I'm not wrong. I have it somewhere written down, but I cannot find it right now. So of course, it's on the market sentiment, as I explained yesterday. The good news actually supported the stocks. And as all the eyes are on the US non-farm payrolls later today, as well as to the Fed Chairman Powell speech before the weekend kicks, we have a bit of a positive to neutral movements. So on the anticipation of that. Other than that, let's go back to, let's flip to gold. A sharp rally lower. It seems that the safe positioning, as the markets are actually pulled back on their safe haven positioning, we have this drift of gold. It retested the 1505 area, trying to recover a bit, but the overall picture is to the downside. So we expect at least we expect the continuation of this decline, a bit of correction because it looks a bit overextended, but there is steam to the downside. It's still within the Bollinger Bar. There is space to be covered to the downside. So if that continues, then we might see also a retest of the around 1500s area. That's a messy one. A break of this area could shift gold back to its low August levels. Other than gold, let's Aussie remains on bid, Kiwi remains on bid, Canadian dollars remain on bid. So the antipodean currencies are continuing to gain some strength. And significantly, let me go back to the Aussie. We'll see that it continues above 0.68 area, and actually broke just now in the European session the peak that we had yesterday, the 0.6830, which was June's low, yesterday's peak. So it was a good resistance area. So on this break, the next resistance area, let me zoom out, up, here we are. So it was the support on June. It was a strong resistance for more than a month, since 8th of August. So this broke just earlier today. It's quite significant. So a decisive closure above it could open the doors towards 0.69 or even 0.70 area, because this break, and despite the fact that it's 1 month resistance and June's low, it's also the fact that the asset is moving above its 50 and 20 day moving average. So it seems that the positive momentum, it's like increasing, but we need to see a confirmed and a strong closure above the 0.6830 area today in order to keep an eye on this area. So other than that, let's flip to dollar yen. Dollar yen continue its rally higher. Yen is weak against the dollar. However, it holds above. It holds in the upper Bollinger Band area, but it holds also within the positive Bollinger Bands and above the 20 period moving average, above the 1.687. And so this is again quite positive for the asset. But significantly, if you go back to a post that I did, if I'm not last week, this area between 106.90 to 107.20, it's our resistance area since 2nd of August, so 1 month resistance area. So if it managed to break this area, which was also support back in July, if it managed to actually break this, let me draw this area and move above it, close above it, then we might see a turn in the outlook from bearish to bullish. So a possible retest of the 200-day moving average at 108.97, just a flip below the 109 area. That was on yen. So let me finish with the euro and the eurozone area in general, and also Brexit. So again, another disappointing release from eurozone. The German industrial production came below expected at a negative 0.6%. Another signal for recession. Another thing that suggests that at the start of the third quarter of 2019, we are coming to the recession, and especially the manufacturing sector in Germany. So that's why we saw this decline, even though now on the anticipation of NFP we have a bit of upside movement, but in general there is a decline on the overall picture for euro. because we had a continuous negative releases from Germany, and especially from the manufacturing sector, suggesting that the recession is nearby. Also, the Eurozone spreads are widened, so it suggests that investors are actually waiting for an extension of a quantitative easing from the ECB next week. So this is again something that drives the euro. In general, it seems that the investors are pricing out some of their expectations for additional asset purchases to be announced next week. So this might be another thing that drives the market, and especially the eurozone area. So the DAX, the eurozone bonds, euro as well, euro crosses, and etc. Last but not least is pound. Sorry, I got a bit lengthy today, but we have a lot of things. So Brexit, mess. I cannot say something else. So we have the pass of the bill regarding no-deal Brexit. So no-deal Brexit is out of the way since the legislation has passed through the House of Commons. So now they are trying to push another legislation, and this legislation is regarding a legislation that will actually push Prime Minister Boris Johnson to request an extension from Europe, an extension of Brexit, so an extension of the 31st of October deadline. So this at this stage actually is a legislation that it's a one-way situation for Boris pretty much. Once the legislation passed, he must request for an extension from the European Union. On the flip side, Boris is responding to this situation quite aggressively by saying that I prefer to be dead in a ditch, as he said, rather than requesting from the Eurozone for another extension. So his next step is really to request make another request for election by Monday, which most probably will be defeated, but we never know. We might, with the Brexit delay bill set to turn into a law, we might see opposition lawmakers to back and support elections, the early elections. So we wait and see. So however, if they don't support the early election request from Boris, then the UK government has to ask European leaders for an extension, while there is a strong possibility also for Boris to actually resign. Other than that, there is not a clear plan, there's not a clear solution on this mess. This is only the UK side. We have nothing, we haven't seen European Union side so far. The Brexit, actually, we haven't seen any further solution on the backstop. We don't have a clear steps on the near future. So everything is a mess, everything is quite uncertain. So we'll wait and see whether the new bill is about to pass, to turn to a law. We will wait to see on Monday whether Boris will actually request for another early election, and whether this will pass or not, and if it passes, whether the opposition lawmakers will actually support his request. And if not, what will happen? So a lot of uncertainty. However, we have seen pound gaining ground just because the no deal scenario is out of the way. Okay, that's the only reason. And of course, that's the only reason for now. However, from the economic data side, things are still to the downside. recession signals from the latest data. So there's nothing actually really support this incline that we have seen the last 2 days. It's just the thing that we have seen no deal scenario out of our out of our way. So thank you for watching. I got a bit lengthy today, but we have a lot of things. Today is NFP day, so live Facebook streaming at 25 past 12 GMT time. We will try to analyze the results and how they affect, or they're gonna affect our markets in the near future. Thank you for watching. Hope you're having a great trading day. See you later on with the Facebook live event. Thank you. Bye-bye.